Welcome, everyone. This is Katie Field, president of Halo Labs. In response to your comments, we have re-recorded the Chief Financial Officer's remarks, which are now presented by Travis Gringas, our VP of Finance. The following recording consolidates a pre-recorded discussion of financial results with the live shareholder update that took place on April 20th, 2020. On behalf of Halo Labs, I thank you for your support.
Good afternoon. My name is Katie Field. I am the president of Halo Labs, and I will be your conference moderator today. At this time, I would like to welcome everyone to the Halo Labs Corporate Update conference call. All lines have been placed on mute to prevent any background noise. Keep in mind, this session will be recorded. After the speaker's remarks, there will be a live Q&A answer session. And if you would like to ask a question, you submit it by pressing raising your hand in the right-hand side of the GoToWebinar attendee screen. The format will be speaker's presentation by Kiran Sidhu, our Chief Executive Officer, and Philip Vandenberg, our Chief Financial Officer. That has been pre-recorded. And again, that will be followed by a live Q&A. Before we segue into that next part, I would just also like to take a moment to extend, on behalf of Halo Labs, our heartfelt concern and sympathy for all the communities, both in the US, the markets where we operate, and internationally, for those who have been affected by COVID-19. With that being said, I would like to, again, just clarify that the speakers on today's call will be Kiran Sidhu and Philip Vandenberg. And I would like to remind listeners that certain statements made during this call may constitute forward-looking information and forward-looking statements within the meaning of applicable securities laws. These statements involve known and unknown risks and uncertainties and other factors which may cause the actual results, performance, or achievements of Halo Labs and its subsidiaries or the industry in which it operates to be materially different from future results, performance, or achievements expressed or implied by such forward-looking statements. When used in this conference call presentation, such statements use words such as may, will, expect, believe, plan, or other similar terminology. These statements reflect management's current expectations regarding future events and operating performance and speak only as of the date hereof. Keep in mind these risk factors are discussed in detail under the headline Risk Factors in our annual information form dated April 16, 2020 and filed on SEDAR. New risk factors may arise from time to time, and it is not possible for management to predict all of these risk factors or the extent to which any factor or combination of factors may cause actual results, performance, or achievements to be materially different from those statements contained in the forward-looking financial statements. Given these risks and uncertainties, investors should not place undue reliance on forward-looking statements as a prediction of actual results. Although the forward-looking statements contained in this presentation are based on what management believes to be reasonable assumptions, Halo cannot assure investors that actual results will be consistent with these forward-looking statements. The company undertakes no obligation to update or revise any forward-looking statements, whether as a result of new information, future events, or otherwise, other than as required under securities legislation. Keep in mind, because many of you have tried to chime in registering after the fact, this will be recorded. So again, this will be posted and be available going forward. I will now turn the call over to Philip Vandenberg, our Chief Financial Officer, in the pre-recorded earnings statement.
Thank you. Let me take you through the highlights of the fourth quarter and 2019 year-end. 2019 revenues increased 158% to $28.1 million. This reflects the inclusion of Coastal Harvest for the year and also HLO, which was not generating revenues in the first quarters of 2018. Comparable revenues increased by 6.2%. Reported gross profit was $3.1 million and gross margin was 11%. The comparable gross profit for 2018 was a loss of $268,000. Adjusted for non-recurring items, impairments, and biological assets, gross profits were $5.3 million and gross margin was 18.7%. The comparable number in 2018 was a loss of $92,000. Non-recurring items included $1 million in expenses, all in Q4. Excessive sales returns were $664,000, customer write-downs were $185,000, commissions booked from previous periods were $285,000. Impairments were $1.2 million, all taken in Q4 as well. Oil impairments were $718,000, cartridges were $294,000, and distillates were $226,000. Biological asset gains were $222,000 for the year. In the fourth quarter, $1.4 million of fair value gains were reversed as sales were realized. Q4 revenues were $2.7 million, which was a 10% decline attributed to the vaporizer crisis, which affected A&M in particular. 2019 prices were flat year over year, while Q4 prices declined 66%, which was really a mix effect. For 2019, unit sales in grams increased 159%. Q4 volumes increased 166%, reflecting the inclusion of Coastal Harvest and HLO, as well as flower sales in the quarter. Halo sold a total of 3.4 million grams across its mix with an average price of $8.19 in 2019. Looking at operations, A&M 2019 revenues were $10.9 million, a 6% increase. Q4 revenues declined 23% to $1.9 million, reflecting the vaporizer crisis as mentioned. A&M's 2019 gross profit was $1.2 million compared to a loss in 2018 of $93,000. Gross margin was 10.8%. Q4 gross loss was $2 million. Adjusted gross profit for the year was $2.6 million, and in 2008 the comparable number was $83,000. Adjusted gross margin was 24.1%, and Q4 2019 adjusted gross profit was $1 million versus Q4 2018, which was $283,000. Non-recurring items in A&M were $849,000, which is made up of excessive sales returns of $664,000 and customer write-offs of $185,000, all taken in Q4. Impairments in A&M were $820,000, made up of oil impairments of $527,000 and cartridge write-downs or impairments of $294,000, again, all taken in the fourth quarter. The gain on biological assets happens only in A&M, and as mentioned, were $222,000 for the year, with a reversal in Q4 of $1.4 million as all harvested material left our facilities. For A&M, price declined 14% as a result of sales mix. However, shatter prices increased in Q4 2019 after having had a tough time for most of the year, getting close to the average price we saw in 2018. Included in sales in A&M are 952 pounds of flour at $494 per pound, or $1.09 per gram. As an illustration, prices increased 21% in the first 9 months of the year in Oregon, but declined 65% in Q4. Following this mix effect, A&M sold a total of 1.6 million grams across its mix in 2019 at an average price of $9.24 per gram. Turning to HLO, 2019 revenue was $2 million, a 224% increase over the partial year 2018. Q4 revenues declined 65% to $200,000, reflecting price declines in business runoff. Gross loss was $600,000 versus 2018, where HLO had a gross profit of $75,000. The adjusted gross loss was $340,000 versus gross profit of $75,000 in 2018. Impairments for distillate and dab tabs, all taken in Q4, were worth about $226,000. Prices declined 26% as a result of price markdowns, which were directly related to these impairments. HLL sold a total of 86,000 grams in 2019 at an average price of $25.83 per gram. However, HLO sales are no longer significant to Halo's total product mix. Turning to Coastal Harvest, 2019 revenue was $15.3 million, and Q4 revenue was $600,000. In 2019, California sales were dependent on 2 large customers. The company decided to reduce that exposure for 2020 by acquiring Mendo Distribution in January. 2019 gross profit was $2.5 million, and gross margin was 16.4%, compared to a loss of $1 million the previous year. Adjusted gross profit was $3 million, adjusted gross margin was $19.4 million, and Q4 had a loss of $500,000. Non-recurring expenses in the quarter were $286,000, reflecting commissions belonging to previous periods. Impairments were $191,000, which were all related to bulk oil. Coastal Harvest sold 1.7 million grams in 2019 at an average price of $9.49. Turning to operating expenses, in 2019, OPEX was $27 million, compared with the $9.7 million in 2018. Q4 OPEX was $13.8 million, compared to $4 million in the previous year. Adjustments were $10.6 million, of which $700,000 are provisions related to accounts receivable in Coastal Harvest, which is included in G&A, and $9.9 million for non-cash payments. Adjusted OPEX was $16.4 million in 2019 and $3.2 million in Q4, which was a 15% increase year over year. Turning to the components of operating expenses, here are the major ones. G&A was $4.7 million and adjusted for provisions was $3.9 million, a 49% increase, which reflects the addition of Coastal Harvest for the first time. The Q4 adjusted G&A was $1 million, which was a year-on-year increase of 13%. Professional fees were $9.9 million in 2019. When adjusted for non-cash payments of $7.6 million, it was $2.3 million, which is a 16% year-over-year increase. Non-cash consulting fees were $2.5 million in Q3 and $5.1 million in Q4. This reflects payments in shares to advisors, contractors, and consultants. Turning to salaries, total salaries were $4.7 million in 2019, and when adjusted for non-cash payments at the corporate office, it was $3.7 million. The year-on-year increase adjusted for non-cash salaries was 130% as the business expanded. The increase in Q4 was 107%. The increase is explained by the addition of a full year of salaries to the corporate center. Salaries in all operations increased less than the increase in revenue in the year. And now turning to EBITDA. EBITDA was a loss of $23.9 million in 2019. Adjusted EBITDA, the gross profit adjustments explained before, were $2.1 million. OPEX adjustments explained before were $7.6 million, and depreciation included in the cost of goods sold was $900,000. Adjusted for these items, the EBITDA loss was $4.9 million for the year. EBITDA in Q4 2019 was a loss of $13.8 million. Gross profit adjustments in Q4 were $3.5 million. OPEX adjustments were $5.1 million. And depreciation, including the cost of goods sold, was $239,000 in Q4, getting to an adjusted EBITDA loss of $4.9 million in Q4. The 2019 A&M cash burn per month was $46,000. For the 9 months, operational cash inflow was $36,000 per month. The cash burn or outflow in Q4 was $302,000 per month. This reflected the decline in sales following the vaporizer crisis in the final quarter of 2019. Replacing lost cartridge sales with live resin and flower sales until cartridge sales resume should return A&M to positive operational cash flow. For 2019, Coastal Harvest cash inflow was $90,000 per month. For the first 9 months, operational cash inflow for Coastal Harvest was $252,000 per month. Q4 had a cash burn of $395,000 per month. Reopening Coastal Harvest for bulk distillate, adding MDT, Outer Galactic, and the North Hollywood dispensary should return Coastal to the positive operational cash flow we've seen before. Reported corporate burn was $1.5 million per month in 2019 and $2.5 million in Q4. The adjusted burn in 2019 was $909,000 per month, and the cash burn in Q4 adjusted was $812,000 per month. To get the group to break even, cash burn would have to be reduced at the corporate center to about $300,000 per month. Having said that, Buffalo will make a difference to reduce the break-even level at the group level. The acquisition of Dispensary Track, AccuDab, and Canalef should also start to add to dispensary sales at some point in 2020. Now, turning to cash flow. 2019 cash flow from operations was a loss of $14.7 million versus $12.3 million in 2018. In Q4, the cash flow from operations was a loss of $2.5 million versus $7.4 million loss in 2018. 2019 CapEx was $1.9 million versus $3.2 million in 2018. In Q4 2019, cash flow from investing dropped to $0.8 million versus $1.9 million in the fourth quarter of 2018 as the company looked to preserve some cash in the current environment. 2019 cash flow from financing was $21.9 million after share issuance costs. In 2018, this was $16 million. In Q4, cash from financing was $3.5 million versus $1.6 million in Q4 2018. Cash from financing in 2019 came predominantly from the convertible debenture issued earlier in the year. For 2019, total cash flow was an increase of $5.3 million and $273,000 in the fourth quarter. Q4 benefited from a sale leaseback of certain manufacturing equipment as well. Our cash balance was $6.1 million at the end of the year, of which $1.7 million is restricted in relation to escrowed interest payments for the 2019 convertible debenture. Turning to the balance sheet, net debt at year-end was $10.1 million, net assets were $24.3 million, and our debt-to-equity ratio was 17%, which points to a very healthy balance sheet. Current assets were $24.1 million, and current liabilities were $8.1 million, which gives the company working capital of $15.3 million, and that includes $7.3 million of inventory. Turning to the capital structure, the number of shares at year-end was 280.3 million, an increase of 122.8 million. The increase in Q4 was 69.6 million shares following the M&A activity in the quarter. There were 146.7 million warrants outstanding, which is an increase for the year of 24.5 million warrants. Broker warrants were 4.6 million at the end of the year, of which 2.9 million were issued in the year and 974,000 were exercised. There were 9.3 million options outstanding at the end of the year. 2.2 million options were issued in the year, and 4.8 million options forfeited as employees left the company. 351,000 options were exercised in the year. Share capital increased by $36.2 million to $67 million at year-end. I'll just mention a few of the larger items. 16.1 million shares were issued for private placements, raising $3.8 million. 46.8 million shares were issued for acquisitions that were non-cash, worth $10.9 million. 8.4 million shares were issued to retire debts of $3 million, and 13 million shares were issued on conversion of the 2019 convertible debenture. There were also 28 million shares issued for services worth $8.6 million, and 4.9 million shares were issued on the conversion of options and warrants, which contributed $1.7 million to capital. That concludes my presentation. Thank you.
Thank you, Philip. Now I will turn it over to Kiran Sidhu, our Chief Executive Officer.
Good afternoon, everybody. I first wanted to start by giving some cautionary notes on forward guidance. We as a company do not provide forward guidance. We are hoping to pick up some analyst coverage by the end of Q3. We're working diligently on that with some investment banks to encourage them to pick up analyst coverage. They themselves may give forward guidance, but as stated, we do not. Also, in light of COVID-19, it's hard to predict outcomes of certain events that we thought were probable before. So a good example is the Central Bank of Lesotho giving us the final stamp for the approval of the acquisition of Buffalo. Until COVID-19 became a pandemic and Lesotho shut down effectively their government offices, except for what they deem as necessary work, we were in line to get the stamp within 24 to 72 hours. Now that the government offices are shut down, we're still being assured that we will get that stamp, and it's a matter of formality. But when it will come is really at the mercy of the pandemic and not so much the central bank anymore. Another good example of how COVID has affected us is with our NoHo dispensary acquisition. The BCC, again, is working remotely and only doing necessary actions. That's the Bureau of Cannabis Control. And the issue there is, again, trying to get someone to approve the transfer of the license so we can begin our construction and start producing revenue. Again, the timing of that is uncertain as a result of the pandemic. That being said, we again got very good news out of LA, where there were positive results from the audit, which basically perfected the license that we have intended to purchase. Thanks, Katie.
Okay, great. Well, look, I just wanted to first say thank you all for joining us. That portion was pre-recorded and we were having technical difficulties with the audio. So I just want to reassure everyone who is attending and everyone who registered that all of these recordings, including that one, will be available when you hear it in the context of just the recording itself. It's going to come through very, very clearly for you. And as always, we encourage you to submit your questions. A few of you have already done so. And with that being said, we'll get started with the live Q&A. And again, please submit your questions because we will continue to take them throughout the duration of our presentation here. Okay, Kiran, this question is for you. We are waiting for Buffalo to close, and we've been waiting for a long time. Why hasn't it been done yet? And is it something to do with COVID-19?
Well, I spoke to that during the pre-recorded point that we just went through. Katie, can you hear me clearly, by the way? Am I coming through clearly?
I can hear you clearly, and I will continue to monitor the questions just to make sure of that. Yep.
So what we've seen with Lesotho and the lockdown, the Lesotho lockdown and the South Africa lockdown are more along the lines of the Chinese lockdown than the U.S. style lockdown. So with us, where we are, we have to have special permits to continue work, and those special permits are strictly monitored by local law enforcement at this time. So since they are monitored by law enforcement, that every day they actually come by and count how many people we have and to make sure that they do have permits at different times. Our operations are not impacted materially. In terms of trying to get a CBL stamp of approval, Louisa and the team are pressing the central bank, but the central bank's governors and officers have said, look, right now they're operating in a skeleton staff and only doing essential services. That being said, we'll continue to persist on that. I myself am frustrated by the situation, as are many of our shareholders. Needless to say that we're working diligently on that, and everything is in place, and we're just waiting. Thanks, Katie.
Okay, this is a quick follow-up question to that, Kiran. A couple of our attendees here are, savvy. They're following the news, and they did see that Canopy had stepped out of Lesotho. So how do we feel that this will create an opportunity for Halo, and what would we be doing differently than Canopy as a result?
I can't speak to why Canopy or anyone elected to leave Lesotho, but I posted on Twitter a few times when I was in Lesotho, and I went by their site. And what was interesting about their site was that it was rarely in operation. It was actually never in operation when I went by. And it seemed like they never really got started. From our perspective in Lesotho, is our view in Lesotho, and maybe it wasn't Canopy's view, that Lesotho is really our bread basket, or what we're focusing on outside of Canada and the United States. So we really believe from Lesotho, in terms of biomass or material, initially GACP material, we would be able to supply high quality material at effective prices, and nothing that we have seen to date has made that condition adverse at this point. In terms of Canopy leaving, the day I heard the news, I spoke to some of our shareholders in Buffalo, our fellow shareholders in Buffalo, who had spoken, who that day actually spoke to Canopy's local partners who are taking over the operation, and they are interested in working with us, particularly on combining our efforts around exports. What's interesting is what we learned is that the local partners there have shifted or pivoted a lot of their output to CBD, which in certain markets does not require GACP certification. It's a looser market. They've been more focused on CBD. We've been more focused on THC. So we're going to talk over the next couple of months. I would say nothing in Africa happens in days or sometimes weeks, on how we can work together. They also have beautiful facilities, even though they haven't been utilized. So hopefully maybe we can utilize some of that in the future together with them.
Okay, great.
Katie?
Yep. No, that was great. Thank you. Okay, so the next question was just generally about the fourth quarter in 2019 and that it was not as good as the other quarters. So in 2019, so what is our outlook then, our expectations for Q1 this year and beyond in 2020?
We do not give guidance, but that doesn't stop me from pointing out some of our news that we've released and some of what we have said to our shareholders at large. So we have clearly stated to all shareholders that in Q1 2020, we had discontinued our wholesale distillate operation at Coastal Harvest in Cathedral City. And the reason that we closed it was due to price depression as a result of E-Valley or the vape crisis. Keep in mind that wholesale distillate in Q1 of 2019 was a major driver of revenue, which we do not have in Q1 of 2020. Also in Q1 2020, I don't anticipate that there'll be any large extraordinary items. It was a fairly clean quarter. In terms of what we're doing in Cathedral City, is we've restarted our operations in Cathedral City using the superfiltration technology that we initially alpha tested in our labs in Medford, and we're running pilots right now in Cathedral City. I am physically on my way down, I'm right now in Mendocino, to Cathedral City to see those pilots in action. So far, the results have been promising, and we'll continue to provide updates as feasible or as possible. So revenues should start accelerating again in Q2, but in Q1, obviously, we did not have the wholesale distillate operation to generate revenue.
Okay, great. All right, so this next question is regarding the super filter technology that you just mentioned in Cathedral City. So isn't this already a somewhat existing technology? And if so, what direction are we going in? Are we going to just buy dirty oil and refine it? Will we be doing it for others, for ourselves? And what is the total market potential for it?
So it is not an existing technology. Most pesticide remediation is currently done using mass spectrometry, or actually a different type of technology where the machines can cost anywhere as low as $1 million, and I've seen machines upward of $5 million using mass spectrometry. Our technology is a different technology, which is part of the blasting process, actually, that we've added on to. Right now, we have over 1 million grams of worthless product ourselves to go through. That is product that we have written off. We have received a few inbound queries from larger California players about either giving us oil on a toll processing basis or selling us oil that we could clean up and sell. There seems to be a large demand for pesticide remediation. Ours is cost effective. Effectively, our cost is 75 cents a gram right now. We haven't optimized it. We're in pilot phase. And we're pricing that when people ask at $1.50 a gram. So we're trying to make what's known as a keystone margin, or a 50% gross margin. There seems to be potential for remediation at that cost. But one thing I want to emphasize is recapturing the written off product directly takes revenue down to gross profit. Effectively, as we recapture that product, we have negligible incremental costs other than our cost of remediation at 75 cents per gram, plus whatever we lose in the remediation process. So what you do is you see a substantial gross margin increase in California as we start to utilize that oil and sell it through in our own finished goods. The other thing I want to emphasize about this is that we're taking waste product or byproduct and filtering them using primarily organic material, which also reduces our environmental footprint overall. It's sort of a form of recycling is another way to look at it.
Okay, so the next question is regarding the flower shop deal. And many of the attendees have been excited about it and they've commented positively about it, but they are wondering how significant G-Eazy's involvement will be to promote the actual brand and cannabis products. Will he be fully committed, and what can we expect?
So it took a while, I'd say, for Gerald and Gabe and Isaac to get comfortable with us and for us to get comfortable with them. And working with an A-list celebrity like Gerald or G-Eazy is not it's kind of tricky, as we've learned in terms of management, legal clearances, and all sorts of other clearances that they themselves have on their side. As part of the deal, this is his exclusive sort of venture in cannabis is going to be Feel Better. That is what he is fully committed to. And again, we at Halo plan to promote Feel Better as our higher end brand. So G has already announced the venture on his Instagram. So people can go to his Instagram and see that. And I think if you look at this relative to other deals, again, I can't comment on Drake and Canopy. I cannot comment on Khalifa and Jay-Z. I don't know if they were active the day of announcement on Instagram and how active those celebrities really were. But with G, we wanted to make sure he was active, and he also is a part owner in the venture. The last thing is all monies raised by Feel Better are going to Feel Better. G-Eazy's agreed that any expense he incurs over $1,000, that the Feel Better board will pre-approve or Feel Better management will pre-approve, which we're going to be part of. So it's not like we're giving money to a celebrity for an endorsement. We're going into partnership with Gerald, with Gabe, and with Isaac. And part of what's important, really important to Gerald, Isaac, Gabe, and myself is the ability to create jobs. And so part of what we're doing here is as we build Feel Better, we're going to build the direct sales force for Feel Better. We're going to build, specific techniques and manufacturing for Feel Better. And so again, here in Mendocino, we'll be hiring people for the Feel Better venture in and of itself. Lastly, barring any COVID-19 travel restrictions, I plan to go down in the next 2 weeks and meet with Gerald and his management in LA to continue the discussions on actually the launch and getting the documents all signed over the next 4 to 6 weeks.
Great. Well, this next question, Kiran, is regarding another expansion of product in California. This time, though, they are wondering about edibles, noting that there's actually a pretty fragmented space there, a lot of competition. So why Halo Edibles? Will it be a value edibles offering or more of a premium luxury type offering?
Our roots at Halo, vis-a-vis A&M, have always been on the value side. Given Andreas's background as a co-founder with Walmart, he's really ingrained that in our culture. So in terms of edibles, in Oregon, in terms of unit volume, I think we're one of the largest players in the state. And what we are there is, again, we're a value brand. So now in California, through the reestablishment of the superfiltration process, and the relaunch of Coastal. Oil, which is the highest cost of goods sold of an edible, really becomes a low cost for us, which we believe to be as low, if not lower, than anyone in the state. So the concept there is to produce the same lines that we've produced in Oregon, which is our Hush Chews or gummies and our Scissor or tincture, and have a release schedule of late Q2, early Q3. And think of edibles as a substrate. In our minds, our edibles taste great. You know, I'll probably post a picture of some samples coming off the line here at MDT later today, or, this week in Twitter as I sit here at MDT. But think of a edible or a tincture or a syrup as a delivery mechanism. So if your cost of goods sold, which is principally oil, is low, then it's just a question of how effectively you can manufacture the delivery substrates in order to have a competitive cost advantage that you can sustain over time in California.
Agreed. All right, so then another question that we've been getting is regarding some of the newer sort of product and development type acquisitions, including Nizalbenoid. And how fast could this product, which is in development, be on the market, either in Canada or the US?
So the goal is by Q3, again, depending on supply chain of actually getting the nasal delivery device, which is quite generic. It's not in the device here, but it's in the formulations. The goal is by Q3 to launch in California and Oregon. And just by way of background, COVID-19, there's a lot of talk about ACE receptors. Again, I'm not a doctor, but it seems that the lungs are compromised by COVID-19 and that smoking or carbonization or vaping or vaporization has a certain effect to amplify the virus through something called the ACE receptors. And please, no one quote me on this. So a lot of people now are interested in edibles, but the issue with edibles has to do with the type of high you receive and the latency. So even with the greatest nanotechnology, it's going to take up to 10 minutes for an edible to onset. However, nasal delivery is also an instant effect like smoking or carbonization through the nasal passages without carbonization or without vaporization. I put on Twitter just a really simple example, or just not even an example of exactly how the Nizalbenoid product is used with the CBD eucalyptus formulation, if anyone wants to see it. So a lot of people said, a lot of people were critical and said, God, you paid so much and you moved so quickly on that deal. And the way I look at it was really simple. We have 5 tested formulations. We plan to launch 15 SKUs, 5 CBD, 5 THC, and 5 1-to-1 CBD THC off those formulations. If, let's say, by the end of Q3, hypothetically, we could do 500,000 incremental gross profit, of incremental revenue at a 40% margin, that's roughly 200,000 of margin contribution a month. And it gives our salesmen another differentiating factor in our bag. So if that's 200,000, if we can get up to a $200,000 rate, that effectively gives us a payback of less than 2 years. So hence, that was our thought process behind it. And sometimes in life, it's much better, in my opinion, to build versus buying, because right now we don't have the staff or the bandwidth to build these things. So it's much easier to buy them and deploy them. Similarly, people have been asking about our software acquisitions. And the key to our software acquisitions right now is getting our dispensaries up in order to pilot our own software before we start rolling it out. So the critical thing is getting some of our dispensaries up, seeing how our software fits in, optimizing it and then rolling it out, or keeping it ourselves in the markets we serve for our own competitive advantages.
Okay, great.
Katie?
So then,
Done.
no, so I think we have about one more question here, which was regarding the Los Angeles dispensary and about when construction would start and what is missing in order to really commence with this. So I can address this. Primarily we've done everything that we need to do in the sense that the merger agreement's been executed. And the only thing that we're pending is the actual transfer of the ownership and the license to Halo. And that is really up to the City of Los Angeles and the regulating body, although we've submitted all the documentation. Our principals in our company, in our licenses that are already in California are already approved by the state of California. So in theory, it should be a more seamless process. But I think, again, with COVID-19, that has placed some of these regulatory approvals on the back burner. Not necessarily the back burner, but just slowed it down. So that's the timing is a little uncertain, and we are, waiting anxiously as well. As we are with Buffalo and just getting that last approval. That being said, we have already lined up all of the other aspects to do with building the dispensary out, such as all of the plans are in place. We have our contractors lined up. We're looking towards getting some, inspections that are involved with the process and expediting those. And we potentially think that this could shorten the time frame so that once we do get that final green light, the dispensary could be built out within 45 days. So that is something that, again, we view as very important. And right now, it's just a matter of getting that green light, again, from the City of Los Angeles. So that being said, I believe that we've covered most of the questions. We, again, apologize for the technical difficulties earlier in the presentation. We want to assure everyone, though, both to the ones that attended the call, the ones that registered for the call, that all of the recordings are going to be available, both in terms of it will be posted on our website, but we will also be sending those directly around to everyone that registered and attended or attended. So you should be able to get that, and we encourage you listen to it again. We appreciate your time. And if you have any further questions, you can feel free to submit that to our investor relations email, or you can message us on Twitter or any of the social media accounts. We really do welcome your questions, and we value you as shareholders of our company. So Kiran or Philip, do either of you have any further comments or any closing remarks?
Philip, I think one thing that's important that was a little muddled during the first part is, if you have a chance, can you go over the state of our balance sheet? Because really in Q4 and Q1, we didn't manage so much by income statement, but we really managed much more so by balance sheet and then looking at cash on cash. So if you can explain to people the state of our balance sheet as of Q4 and how we really emphasize that.
Can you hear me?
Yes, Philip, we can hear you.
Well, the balance sheet, at the end of the year, we had a net debt of 10 million and net assets were 24 million. So our net debt to equity was only 17%. So basically, we have a very healthy balance sheet. Also, we have more than 50 million of working capital, of which half is inventory that we can use. We have a very, very healthy working capital situation. And in terms of the capital structure in the balance sheets, give you an idea, we had 280 million shares at the year end, and we issued 123 million shares during the year, of which 70 million were issued in Q4. And that was all related to M&A activity. So to give you an idea, we issued 47 million shares in relation to acquisitions, of which the fair value of the capital contribution was 11 million. And that were basically all non-cash. So we didn't spend any money, any cash on acquisitions was all done with issuing shares. The same with our consultants who have been working with us on the advisory side for M&A. We had about, in our corporate center, we had about 7.5 million of, call it non-cash payments to consultants. That was all M&A related. So you really should make an adjustment in the corporate center for about 7.5 million of that. What that did is we issued 28 million shares in relation to that. That was basically a saving of, in fair value terms, of 9 million. In Q4, that was like 13 million shares for a value of fair value of 3 million. All that is all cash that has been preserved, has not been spent. It's all been done in issuing shares. That's why we have a pretty healthy balance sheet. We didn't really burn as much cash when you adjust it all for non-cash items. So we're in a pretty good position. And basically, the key of how we have done things was all based on preserve as much cash as we can going into 2020. That is pretty much it.
Okay, great. No, I'm glad that you discussed that, Philip, because that is a question that was that some of the attendees had asked in the question panel here. So I'm glad that we got to that. Kiran, is there any chance that we can comment on the UK and some of the press that we've disclosed around that?
Sure. So we, I think today or tomorrow, need to get an extension from the principals of CanMart, which we're in the process of securing. The UK is a longer-term investment, so I'm not really expecting any substantial or material cash drain, cash investment, or cash coming in from the UK in 2020. The key is to get that distributor up for what I believe they call like CMBPs or whatever, for cannabis medicinal-based products, is the acronym they use in the UK. So to be in shape to actually begin getting that chain established, it sort of reminds me of when we did it early on in Oregon, when we were one of the first distributors, and how that was very critical in order to maintain share in Oregon. Similarly, in the UK, the goal is with non-material cash investment to be able to get that business up and running, and then look in 2021, 2022, when Prohibition Partners and other sources, they're the equivalent, I believe, not the equivalent, but they're like a BDS in Europe, say that market is going to dramatically increase. So it's just having a seat at the table, and it's connecting the dots from what I call seed all the way to sale. And what I mean by that is seed sort of being the DNA and our seeds in Lesotho, and the sale being, let's say, in the UK, in Malta, in Spain, in Greece, in Australia, potentially even in Israel, is where you want to start developing sales. And I think the UK, in terms of cannabis consumption, is one of the top markets in Europe currently, and will continue to be so in the future. It's just like the US come 2012, and that is shifting that demand from the gray or black market to the white market, which, as we've seen in the US, just takes time and having a seat at the table as that happens.
Okay, well, I think that about covers it. Philip, Kiran, if you have any further questions or remarks or anything else that you think we need to address, now would be the time to do so.
No, I just want to thank everyone for attending the call. I want to apologize to everyone for the technical difficulties in the beginning. Part of what I think happened is we actually maxed bandwidth, which I think is just a sign of the times. As Katie said, every recording, all the recordings will be posted online. We'll try to be as responsive as we can to questions. To a lot of people who follow me on Twitter, I have not been as active on Twitter as I normally was. I think that was a source of frustration for a lot of people, and that had to do with the fact that earnings were coming out. And during, a period right before earnings are coming out, we prefer to be a little bit more quiet. Now that we're 72 hours, or soon will be 72 hours after earnings, you'll be seeing a lot more responsiveness from us to the extent we can be responsive.
Okay, exactly. So again, thank you all. I encourage you to reach out to us directly, but please be assured that we will compile the recordings, both what we had done over the weekend in addition to today, and we'll make those available to you and ensure that they're in an easy to listen to and understand format. So again, thank you so much for joining us, and we look forward to continuing to hear from you, and thank you again for being our shareholders.